Okay, now the price action ended up doing what we were looking for yesterday. Let's go ahead and validate the potentials for the following days, because now things are getting a little interesting. We have to make sure to watch our longs. We have to make sure to watch the play very carefully upon these validations now. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a COEP technicals, raw price action, and statistical thread of analysis on this Tuesday, Taco Tuesday. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, so yeah, we're looking at COEP on a daily chart here, and we talked about the potential of coming back down to the space between the 1.618, 166, and the 1.272 at 160. We ended up getting just that with a low of about $1.62. Okay, so now in the after hours, it's showing that we are potentially sitting at, well, let's see the 12-hour and see what it's got for us. So it's showing that we're sitting at about 169, but I think maybe Webull is showing something different, right? So let's just go ahead and pull that up real quick and see what it's got. Okay, but nonetheless, you guys, the thing that I'm trying to say here is that yes, we were expecting this downside. We were expecting the test and to start getting the validity out of this support, newly converted resistance into support, right? So it's looking like this is pretty much it, right? So, but like I said, guys, when we get these downsides, we have to make sure that we keep a close eye. Okay, yeah, the price action is sitting at about 166, literally at the target that we were talking about yesterday in the after hours, right? So it is a good thing. It is a good thing, all right? Now let's just go ahead and validate to see if we have any potentials, because it's this downside can bring relevance to other potential targets, okay, and other psychological components. Let's go ahead and continue and find out what exactly I mean by that. Okay, so on this chart, I have to show you something very, very curious. Okay, well, this is the hourly chart, of course. The smaller the time frame, the less of a strike rate we have in formations and candle analysis and all kinds of things, right? So let's just go ahead and notice first what could be a little bit of bearish news, okay, and then we'll follow up with it being bullish. Okay, so this, what you're looking at here, is a descending triangle, okay, or a symmetric. Yeah, a descending triangle or a right angled triangle. Okay, so usually this triangle here after an uptrend presents the potential of a continuation to the downside. Okay, so that doesn't always happen, and in fact, this could honestly present kind of a liquidity trap for the bears. And why I'm saying that is because there is a heavily confluent target down here at $1.52 per this gap right here. Okay, so now if I can show you the relevance of $1.52 before we continue on this chart, okay, let me just go ahead and show you down here that now remember, this is the hourly chart here. Okay, 1 hour. Let's go to the daily chart now. Okay, so the daily chart would be every candle taking one whole day to complete. This takes just 1 hour to complete a candle, right? So let's go back and take a look at the daily chart and take a look at the relevance of the daily gap right over here, and notice the target that we have. We have 155 at the bottom side of that gap, right? So that's another signal that there could potentially be a further continuation and validation of this newly converted resistance into support. Okay, so now let me go ahead and show you another thing. Okay, so this is the weekly time frame now, and we're looking at the breakout out of a symmetrical triangle. Okay, so this symmetrical triangle does not give us a bullish or bearish outlook. In fact, it's omnidextrous, right? So this thing can trade both ways. It can trade to the upside and the downside. It is an indecision formation after a downtrend. Okay, so after an uptrend, this formation would then turn into a pennant, and then it could actually be a continuation formation from the downside to the upside, right? So now in this case, go ahead and notice that the weekly candle iteration, the one that we're currently on right now, still has almost 3 days to close. So it is an eternity away. So now let's just go ahead and see that we actually did break out of the triangle entirely. Okay, so now as we get closer, or a closer look at the triangle support that we still haven't, came back to test and validate as a relevant area of support, let's look at that target, $1.52. Okay, so $1.52 right at the support touch of this triangle. We have $1.52 at the hourly candle right over here from the bottom side of this gap. We have $1.55 on the daily chart over here from this gap down here, and also the 1 fib. So there is a lot of rhyming with that 152, 155 level. It's not to say that we're going down there. I'm just telling you that there is a potential. Remember, I haven't even really seen this chart. I just kind of came in here and noted some quick little psychological components, and then press record, right? So that's the beauty of not having pre-edited videos. So these videos are literally just one shot. Here you go, bam, wham, bam, thank you, ma'am, let's go. Okay, I don't have the time to edit no videos, okay, you guys? So this is the reason why I'm doing it the way I do it, because it does present the magic and it does present the strategy as pure as it is. Okay, so another thing that could validate that continuation to the downside to touch that 155, 152 level is a simple fact that we did get a little bit of a bearish engulfing print right here, right on the daily time frame. All right, so that usually presents a downside to come in. But remember, guys, we usually when we come up to these breakouts, it's not always that we just get one candle and let's go, right? So we definitely have to kind of sit here and make sure that the bulls feel safe enough that this is a valid area of support before that continuation to the upside. Okay, this is a good thing, because upon an upside continuation, you start chopping around in here, you get a consolidation period or a capitulation period, sorry, then we have a very strong area of support starting from that 155 level to about 163. Okay, so that's a good thing. All right, you guys. So now let's go ahead and continue on the analysis here on the hourly chart. Okay, so now that is the bearish news. Okay, so let's go ahead and pick up the perspective from the bulls though. Okay, now let's go ahead and show you a different formation. In this case, we are looking at a pennant. Okay, so what I ended up doing was I matched the wick low of this candle and the wick low of this candle to create what could be that right-angled triangle, or the descending triangle, right? So now know for a fact that we need at least 2 touches of the support in order for us to validate the formation in the first place. In this case, we only have 1 for the descending triangle. Okay, so now the pennant does have 2. In fact, it has 3. Okay, so far, I mean, I don't know here, 160, 165 or 166 is the area of support here. In the 166 or 165 area, look where it lands, the spot 618. And if you recall, just about 4 minutes ago, or I'm sorry, just a little bit of a few minutes ago, I spoke to you that we are sitting in the after hours at 166 right now. Okay, so literally at the moment I'm speaking of right now, you can see the time right up here on my computer. It's 3:05 p.m. The after hours is still going. Okay, Pacific time. All right, so yeah, let's go back to this. We are currently sitting right at that 166 support bottom of the pennant. Now, the bullish scenario within this is that pennants are usually a continuation formation when they're realized, or when they're drawing or forming from a downside, after an upside. Okay, so we have the low over here at 119. We made an upside trek, and then we started consolidating here, making a series of higher lows higher lows and lower highs, right? So this is a good thing. All right. So I'm thinking that if we do succeed this pennant, then the target or the price objective could be this. Okay, so let's go ahead and take a trend line from the top side of the triangle all the way to the lower end of the triangle, and now we apply it to the supposed area of breakout, which could usually be about 65-70% to the apex of the triangle. Okay, sometimes we have to actually contract all the price action all the way to the apex of the triangle before a continuation onto the upside, but in this case, it's okay. Let's just go ahead and take advantage of our fibs from the current range, today's range high to the range low. Okay, I'm talking about just today's range. Okay, so right over here like this, and go ahead and notice that the price action would take us to a high confluence here of the 2.272 and the $2.24 target of the price objective. Okay, 225 on that 2.72. So very, very confluent with the geometrical targets. Okay, so that's already suggesting that potential. Okay, so this doesn't mean that we can't actually wick break down, right? So in fact, short sellers would have their stop losses located right at around 159 or just below it, right? Maybe even 158, just in case of a false breakout, right? So what they're looking for, or not breakout, in their case, it would be considered a breakdown, right? So they would be waiting for I'm sorry, the longs would have, what the hell's going on here? The longs would have their stop loss set at about 158, right, before continuing on to the upside, okay, continuation to the upside. Now, the shorts, I'm sorry, would have their stop loss located just upside of wave number 2, right? So right at about 192 is where their stop loss could be, right? So when those stops get triggered from the shorts, then that's what propels us into the price objective, right? So that would be essentially the play. Remember that this formation is particular to the upside for bulls, okay? So it is a continuation formation. This just presents a temporary pause and reaccumulation period for a continuation to the upside, okay? So far I'm kind of favoring this, right? But we still have signals to kind of go over. All right, you guys. So again, we were talking about yesterday the mean being at actually the last 2 days, the mean being at 182. We're still rejecting from the mean itself, and I mean, we're just knocking at the door of it, right? So it doesn't mean that we're not gonna succeed. It just means that we're knocking at the door and seeing the potentials of it. Okay, so now let's go ahead and refer to the RSI and take a look here. Okay, so we have. I don't really trust these little pivots right here. This could very likely take us to a shorter downside, right? So remember, we have the gravitational zone located right here, right at the 48% level, right? So where we have actually bounced a few times from. And then continued on to the upside. So very likely we can actually touch a temporary downside to about that 48% before an upside. Notice that the bi-hourly is also suggesting that downside. And then as we start to get into the 8-hour, we have that limited downside, right? So this is already suggesting that we could be consolidating, followed by a touch of the support levels that we talked about just recently. And that would be essentially the validators for our continuation to the upside. Okay, daily time frame still showing very limited downside here. In fact, the daily is within the gravitational zone of the bull weakness percentile. Now, this 8-hour, I think it's laying all within the 8-hour. Okay, the 8-hour is in the gravitational zone of the bull strength percentile, suggesting a gravity pull back down. But notice that the 14-day moving average may actually meet that RSI signal at the gravitational zone, and then followed by a continuation onto the upside. The reason why I'm saying continuation to the upside is because the upper time frames are still suggesting as such. Okay, notice the 3-day time frame with a pivot straight to the upside in the gravitational zone of the bear strength, suggesting a pull. And also notice right over here that the 5-day iteration is now in the gravitational zone of the oversold percentile, suggesting a continuation onto the upside. Both of the 14-day simple moving averages are suggesting that upside as well. So it's looking pretty good in the higher term time frame. So there, yeah, like I said, guys, and like I said yesterday too, yes, we could actually be facing a consolidation period for the next few days before we can continue on to the upside. Okay, so this is essentially the accumulation for the play to the upside. Okay, you guys, so we already have a break of, we already have an entire break of market structure here, right? So not only the fact that we got the floor at that 103, then we broke this higher low structure here by this candle here, but then we started accumulating and broke it again. Now we broke this high, right? So this is already suggesting the potential of a continuation to the upside, okay? But we have to keep a close eye on this. Remember, guys, the links in the description below will include the ArcMasters trading course, where you can actually get enrolled, and I will be teaching live, from the very beginnings of the fundamentals of trading all the way up to advanced topics and mathematical application. Okay, you guys, remember firstly, okay, that I'm not a financial advisor. Okay, take whatever I do show and iterate within these videos as just a form of entertainment. I cannot suggest for you to buy or sell any assets whatsoever. Okay, I need you to do your own due diligence, and everything will be just fine. All right, you guys. But with that said, I wish you well, a very good night, and I will catch you at the bell mañana. Adios.